Today is Sunday, April 26, 2026, and since the markets are currently closed, we are looking at the final numbers from the last active trading session. Plug Power ended the day at $3.14 per share on Friday, April 24th, marking a decrease of 1.26% as it slipped 4 cents from its opening price. While that headline figure suggests a quiet slide, the intraday movement told a much more aggressive story. We saw a high of $3.38 and a low of $3.08, a massive 30-cent swing for a stock trading in the $3 range. That level of volatility indicates a fierce tug of war behind the scenes, and the reality of what is happening with Plug Power is starting to diverge sharply from the common market narrative. Most investors look at this ticker and see a company struggling to maintain its footing. But if you look at the recent institutional activity and the sheer volume, over 76 million shares traded in the single day, there is a sense that the floor is being built much more solidly than the price action suggests. The expectation for Plug Power has long been one of wait and see. People expect disappointment, because that has been the historical pattern. However, the reality we are seeing in April 2026 is a company that is finally moving from theoretical infrastructure to massive, tangible industrial contracts. Just look at the recent selection of Plug Power to supply a 275 megawatt Gen Eco electrolyzer system for the project in Quebec. That is not just a pilot program, it is one of the largest electrolyzer awards ever documented. While the general sentiment remains cautious, these large-scale wins are creating a curiosity loop for the smart player. Why is the stock stuck at $3.14 while the contract backlog is hitting record highs? It is because the market is pricing in the fear of past dilution, but it is ignoring the fact that the company is currently on a roadshow meeting with institutional heavyweights from RBC to Roth, specifically discussing the path to profitability under the new leadership of José Luis Crespo. If you have been watching the technicals, the recent break above the $2.60 resistance level was a major signal. For months, the stock was suppressed, but the double bottom formation we saw earlier this spring has acted as a launchpad. Even with the minor pullback on Friday, the RSI remains in a healthy rising trend. This suggests that the sellers who were dumping shares in the low twos are largely gone, replaced by a more patient class of buyers. When we look at the individual brokerage activity in platforms like the Fidelity mobile app or SoFi Invest, we see a surge in retail interest, but the real power is in the institutional ownership, which now sits at roughly 43%. These big players are not just looking for a quick flip, they are looking at the 37% compound annual growth rate projected for the hydrogen market through 2030. They are positioning themselves for a landscape where hydrogen isn't just an alternative, but a necessity for heavy mobility and stationary power. Speaking of positioning, I want to hear from you. Comment below how many shares of Plug Power you currently hold, or if you are waiting for it to dip back under $3 before you pull the trigger. The sheer scale of the Gen Eco electrolyzer revenue, which hit $187 million last year, shows that the business model is shifting. For years, Plug Power was essentially an R&D shop that happened to sell some forklifts to Amazon and Walmart. Now, they are an energy producer and an equipment manufacturer for the global ammonia and green hydrogen industry. The expectation was that they would run out of cash before they reached this scale, but the reality is that the $8 billion sales funnel they've built is starting to convert into actual revenue. We are seeing a 12.9% year-over-year revenue increase, and while they are still technically unprofitable, the gap is narrowing faster than the bears predicted. This tension between the historical trauma of the going concern warnings and the current reality of a 275 megawatt contract win is exactly where the opportunity lies. When you look at your Robinhood app or check your Interactive Brokers platform, it's easy to get caught up in the red and green daily candles. But the broader perspective involves the macroeconomic pressures of 2026. High interest rates have historically punished companies like Plug because they require massive capital expenditure. However, we are now seeing a shift where government incentives and the global push for decarbonization are offsetting those borrowing costs. The project in Quebec, for instance, leverages Hydro-Quebec's electricity, showing how Plug is strategically picking locations where the input costs are lowest. This is a level of operational maturity we haven't seen from this management team in previous years. They are no longer just chasing every deal, they are chasing the right deals that lead to margin expansion. For those using tools like Schwab Intelligent Portfolios or looking for investment help through Fidelity Wealth Management, the question is often about risk-adjusted returns. Plug is undeniably high risk, but the reality is that the floor has moved. A year ago, a bad earnings report could have sent the stock to zero. Today, with the 52-week low sitting at 69 cents and the stock firmly holding above $3 despite market volatility, the downside protection comes from the actual physical assets and the technology moat they've built. They have delivered over 300 megawatts of electrolyzers across 6 continents. That is a footprint that is very difficult for a competitor to replicate overnight. Let's talk about what this company actually does for a moment, just to ground the analysis. Plug Power builds the entire ecosystem for hydrogen. They make the electrolyzers that create the hydrogen from water and electricity. They build the transport and storage infrastructure, and they build the fuel cells that turn that hydrogen back into electricity to power a truck or a warehouse vehicle. Their Gen Drive fuel cells are the industry standard for material handling, but the Gen Eco line is what's driving future growth.
This integrated approach is their biggest strength and their biggest weakness. It's expensive to do everything, but if they succeed, they own the entire value chain. Looking at the future outlook, the recent Reddit AMA with CEO Jose Luis Crespo on April 16th was a major signal for transparency. The market is waiting to see if he can deliver on the operational scale he keeps promising. If the company can show even a single quarter of positive cash flow from operations in the latter half of 2026, the expectation of perpetual unprofitability will be shattered. The catalyst to watch are the completion of the Georgia and Tennessee hydrogen plants. Once those are fully operational and serving the hydrogen highway, the cost of fuel for their customers will drop, making the fuel cells even more attractive. The risk, of course, remains execution. We have seen delays before. If the Quebec project hits a snag or if the institutional roadshow fails to bring in more sticky capital, the stock could easily retest the $2.50 level. But right now, the volume tells us that the conviction is leaning toward the bulls. When you see 76 million shares move in a day where the price only drops 4 cents, that is a sign of absorption. Big players are scooping up the shares that frustrated retail investors are dropping. Whether you are using a self-investing approach through the Robinhood app or managing a more complex portfolio on the Interactive Brokers platform, the data suggests that Plug Power is no longer the speculative lottery ticket it was in 2021. It's becoming a legitimate industrial play in a sector that is finally reaching its tipping point. To summarize, the contrast between expectation and reality here is stark. The market expects another round of dilution and missed targets. The reality is a company signing 275 megawatt contracts, growing revenue at double digits, and sitting on a massive sales funnel. We started the session at $3.19 and ended at $3.14, but that minor dip masks a massive amount of institutional positioning. The hydrogen revolution is no longer a buzzword. It's a $22 billion market in 2026, and Plug Power is sitting at the very center of it. Whether you're looking at your individual brokerage account or analyzing Fidelity ETFs for energy exposure, this is a ticker that demands your attention, because the gap between what people think is happening and what the balance sheet is starting to show is wider than ever. Keep an eye on the volume and the upcoming conference reports, as they will be the ultimate tell for the next leg up. Keep your strategy grounded, watch the levels, and stay objective. Disclaimer. This video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends. Subscribe for more updates.